Happy New Year everybody, and welcome to my first video for 2018. This will be about my performance for day trading throughout 2017. I'm going to discuss many things that I have learned from the experience, from what I did well, right down to what I need to improve on. Everything that you see here is based on live trading with real money as it happened. There's no backtesting involved here. I started day trading in January of last year as a way to push myself forward to become a better trader. My goal for the year was to create an efficient process to analyze the market, find trading opportunities, as well as actively reflecting on my trading at the end of each day. I used my own strategy on the 15-minute chart to trade using intraday support resistance levels. You can watch my live trading videos to see how it works. My strategy can be summarized in 3 simple points. Firstly, I scan over 28 currency pairs to find the strongest and weakest currencies based on pure price action. Next, I identify intraday support and resistance levels based on yesterday's price movements. And then I would look for setups to go long above support and short below resistance after a breakout. The majority of my trading was done during London session from 8 AM to 11 AM London time, from Tuesday to Thursday only. There were some cases where I traded earlier than 8 AM, and that's because the setup came early. I traded a few times during New York session also, but it was only experimental. This is the summary of my performance. I started trading with very small position size and slowly increased it. I didn't see the point of trading bigger, especially when I have never traded this strategy live before. As mentioned earlier, the goal was to build an efficient trading process, so it wasn't in my interest to trade big sum of money right away. I made 60 trades for the year with a win rate of 27%, average reward to risk ratio of 2.94, and positive expectancy of 0.05. The low win rate is most likely due to the combination of exiting trade early to cut potential losses and the way breakout works. In the 60 trade, I had 11 losses in a row and 4 wins in a row. Now, you might think that 11 consecutive losses from 60 trade is bad, but I can assure you that this is statistically normal. This is one of many trading calculators that I created. Most of you watching would have access to them through Forex for Noobs. Using my stats of 27% win rate and 60 trades, we can see that my 11 is well within the statistical normal. It's not nice to have 11 consecutive losses, but it's perfectly normal for it to happen naturally given the low win rate. There were instances where I reduced my position size to fit the risk profile of the trade. These weren't supposed to be smaller than £5, but because I was already trading so small, it wasn't possible to be accurate when going even smaller. Imagine trying to cut a 1 centimeter long piece of paper into 20 equal pieces. You would end up with uneven pieces simply due to the fact that you can't control your hand for that kind of precision. This is why I have these numbers on the stats. Trading commissions were about £0.50 on average, which is 4.1% of the average capital risk per trade. Even though I have positive expectancy, the cost of trading is actually more than the net profits made. So I actually lost about £5 over the 60 trade. This is why I only use results with live trading instead of backtesting. It's impossible to accurately work out trading costs when backtesting. Many traders get caught in this trap and lose a lot of money when they commit to trade a strategy based only on backtesting results. My strategy has positive expectancy, but the cost of trading to get there is actually higher than the profits earned. This tells me that I need to make changes to improve expectancy. It needs to be higher than 0.05. I also have a breakdown of profitability based on the trading day. Thursdays are the most profitable for me, followed by Tuesday and Wednesday. So, to sum up my performance in one sentence, strategy has edge but not profitable after trading cost. This is a performance review after all, so now I'm going to discuss what I did right in 2017 and what I need to work on for 2018. I can say that I've achieved the goal I set out for day trading this year. I have created an efficient process for day trading, which I can now use for any other strategy in the future. At the beginning, it would take me half an hour to do my analysis and write up my trading plan for the day. Now I can do it in 10 minutes with more details and better screenshots. Here's the first daily analysis report I did for January. It was just a few dot points and a screenshot that's too small to see. I'd made changes to it as I go, and now it looks much better. The information is summarized nicely in a table, screenshots are larger, and they have drawings on them to give more meaning. Another thing that I did right was actively reflecting on how I traded at the end of each day. At first it was a simple document I called a playbook, where I documented every trading decision even when it didn't lead to a trade. Eventually, it was upgraded to a better format that also included video recording. I would rewatch these videos, add commentary to it, and actively think about my actions during the sessions. It was a very good exercise to do because I had the chance to see mistakes that I would otherwise not remember. Lastly, my ability to use price action to exit trades early is getting to a point where I'm very good at getting out of losing trades early. I seem to have an eye for spotting warning signs very early, and I use it to exit trades before stop loss is hit. You will find many examples of this in my live trading videos. I wish that I can find early signs of a winning trade because it would really improve my profitability. But I'm still very happy that I'm good at cutting losses early, because that's half the equation to trading success. You know the saying, cut your losses early and let your profits run. I've managed to learn the first part of it. This is a long list which could take hours to discuss, so I will only talk about what I think are the most important areas that I need to improve on. The first and most important is the fact that I haven't been able to take advantage of trade setups that were in the opposite direction of my plan. Some of these setups were very clear signals. The reason that I didn't trade them is because I wanted to stay disciplined. I wanted to only be trading my plan, which doesn't include these setups because they hadn't come up when I write the plan. This was particularly true for setups where there were signs that a breakout move does not have enough momentum behind it. Instead, reversal setups would form at intraday support resistance level, and they turn out to be great trades with large reward to risk ratio. To work on this, I'm going to let myself trade these setups on the condition that I use a smaller position size and use targets larger than 2 times reward to risk. I also need to clearly document these trades to justify why I took them. Next, I need to start setting larger targets for my trades. Looking back at all of my trades, about 1 in 3 winners would have hit targets twice as large. This ties in with the concept of letting winners run. Admittedly, I have not been doing it because I find it more difficult than cutting losses early, but now is the time that I need to learn how to do it. Final point would be about flexibility in the time of trading. Using the latest statistics, my daily scanner is correct 71% of the time about which currency pair will make a big intraday move and in which direction. But it doesn't tell me how the move will happen or when it would happen during the day. Some will move during Asia while others would move during New York. My trading in the first 3 hours of London Open is rather restrictive. There's nothing that I can do to make these setups come up during the session that I trade. I'm also not trading Mondays and Fridays, which means that I'm missing out on potential setups on these days. When I trade, it's mostly dictated by my availability during the week. I need to find a way to be more flexible in my trading. So what is going to happen this year in terms of trading for me? You might have noticed that I started trading with options in November and December. The reason for the change is down to my availability. There were unexpected events happening in my life and it took up a lot of my time, so I had to change the way I trade. The first half of this year I will be trading only options because my business in Perth has a big project to complete. I look forward to returning to day trading in the second half of the year. In the meantime, I will be trading Forex options on the weekly and monthly time frames since they only require a minimal amount of time per week. I will make as many trading videos as I can so you can follow along with my progress. That's about it for me for this video. I wish you a profitable trading year for 2018 and see you in my next video.